Maximus Analysis here for July 6th, 2016, and I wanted to start off with the ES just to kind of show on the 60-minute what we had going on for the Brexit. Okay, the Brexit was this flush down Friday, Monday flush down again, and they've taken back almost all of it. Okay, the high is 21.1950 is the high, and you can see why I'm saying that this specific level of under 2050 would be something that we do not want to retrace back to. Now, I want to see what the overnight retracement looks like if there is a retracement. So we can have one of two solutions to this. Either we can have a continuation of this little pattern right here, so they break above and they go and take out these highs, which let's just point it out and see what we have. So we can have this little continuation pattern and not see a break back below here or a break back below here and a break above, or we could see them come and test this area. Now, the reason that we don't want to see them, if you're on the bull side, test this area again is because they roll back into these previous highs. Now, they did break one low, but not two, so that's fine. So if we take this same type of deal here, put it right here, you could say that they broke one low. Excuse me. That would be something like this. They broke this low, but they did not break two lows back. So again, they're holding these levels, and we want them not to get back below this low right here. If you're on the bull side, that's all week. So tomorrow's Thursday. We have EIA report. We had FOMC meeting today, minutes today, that they said that, again, whatever. They say that the economy cannot handle a interest rate hike or whatever, but you know, it is what it is. We're just going to try to trade the charts, quite honestly. So you saw high volume step in here near the low at 10 o'clock, and it still hasn't given me a high spike to the upside to say capitulation. So we'll continue to see if this is going to continue and go to take out these highs right here, or we're going to get some type of retracement, which will then put it in a grinding type of pattern, which we talked about on the newsletter. But that means that we have a high, we get back, we didn't have a layer enough high. We need something like this layer. If you look to the left, you'll see that lower, that high, and then something like this. Now this would be something, you know, healthier, but again, we're moving very, we got a lot of stuff going on. So either this happens or we have something similar, and this is, I just want to be prepared for both sides. I have not initiated any new positions. I took a lot of my shorts off actually last Monday, and I'm just in runners, so I'm not really worried about it. But you don't want this this test. That's what you don't want to see happen. So we'll continue to watch and go from there. And again, on the daily time frame, you can see that they're giving you a nice little, well, I guess 1 bar pullback so far, which is something I typically don't trade. And again, they've come back more than 50% into the Brexit flush. Okay, so you have the engulfing pattern. You have up 1, 2, 3 days, just minor rest yesterday, and they didn't. They broke yesterday's low, which gave a sell signal, but they grabbed it right back within a little bit of time. So again, you want them to hold at least this 2055 area. Now let's look at the NQ. And on the intraday, again, everything's going to look kind of the same, but the NQ, they're holding this 200-day moving average. They're still in the middle of the the ascending or the pennant, meaning the triangle is just, you know, it's an equal triangle. If I put, you know, something like this, you can kind of see it better, like that. So you can see it. Again, my uptrend line is right here, but you can see that triangle for people that can't. Hopefully that you can see it now, but it's just showing that they've been chopping, breaking, coming back in, chopping, breaking, come back in. So if they break above, we don't want them to come back in, because again, it's going to pop either one way or the other, because this is what, if you could envision Bollinger Bands, which basically are trying to capture the volatility type of move, you can see that it's starting to they would, if you could visualize it, start to squeeze. I don't use Bollinger Bands, but I'm just trying to show you that we have a lot of consolidation, that they're going to have to pop one way or the other. In the middle of this, we're in chop, but you can see again, same type of deal, that they broke uh, they actually broke this low, came back and broke this one, and with this one, and now we want to see where they're going to go again. So you don't want them to revisit these, this low, quite honestly, because if they revisit this low, they're going to either come and test here, or they're going to contest these lows right here. And again, we don't want to get lazy to not say, oh, they can't come back, because I mean, both sides. You've been seeing a lot of volatility, and again, it's not something to say you're wrong or right when it's something that you're going from one position to the. If you're going from fully bullish to fully bearish within 24 to 48 hours, and you see that kind of dancing back and forth, you're in a choppy situation. Okay. On the newsletter, I said that we have indecision, and it's just continued. I mean, we're going into Thursday, so we'll continue to see what we got going on. YM on the daily, same thing. They're giving a nice little hammer right here, but this is not a pullback. Again, I would want more pullback, because again, right here will be a lot of stops under that 17,600. If I miss the move, that's fine, but it's just still in chop to me, so I just wanted to clear some one way or the other, and I'm willing to go on a higher time frame so I could get a little bit more clarity. Now, crude had a pop up, and we've shown that this area 46, 47 is a level of importance, and they came and they recaptured it right here. So we're going to continue to see what they're going to do. They had a flush down, but if you look on the weekly time frame for crude, you will see that we're just dancing sideways. So again, I want to see this candle close and see what they're going to do, either pop up or pop down. If we use the continuous contract, which on eSignal is the pound F, yeah, I think it's equal 1. Yep, pound F equal 1, you could see that again they can do this for a while. Look, going back here, you can see that they've gone 1, 2, 3, 4, 5, 6, 7 weeks sideways. So it's best to just wait and see what's going on versus every week you're saying, oh, it's bearish, oh, it's bullish, oh, it's bearish. Just wait. And again, I'm not trading the breakout, but in this situation, you kind of got to see what the trend was going into it. And right now, we could have an inverted head and shoulders pattern. I put more on the newsletter about this and wrote up about it. So let's continue. Bonds were up a little bit today. This is the weekly. Let's look at the daily. Still popping up higher, making higher lows, and didn't really take out much here. But looking at gold as well, gold is continuing, but gold looks like it might be a little tired here. You're starting to see a little volume spike right here, so gold might be something that I would look at to short. Waiting, it's up 1, 2, 3, 4, 5 weeks. So we'll see what this volume looks like, where it closes, and I'll probably use like a GDX or a GLD or something like that if I even choose to go that route. Now, we had some amazing movement, continued movement, Amazon making new highs. Again, short bounce off of this level here. Again, indecision, but want to see how much more they got in the tank, because don't want to get stuck out there. Again, the volume could be low, but it could continue, but I have to get the setup that I want. And I think that that's the thing that a lot of traders don't look at, is the trade has to come to me versus me forcing the trade. So let's see. And again, they got out here. Let's hope it's not a false breakout and we start getting that grind mode. But right now they're making new highs. Apple have a nice little small, I guess, small engulfing pattern right here. Maybe give you a little pop up, but it's just still in a, I want to see the setup on all time frames, and right now it's just holding the 200, but I would wait actually, just because it's easier knowing that you got all these lower highs and you got this channel and you're in the middle of it. Okay, you got to trade with the trend, and the trend is down, but you even want to say if you're channel trading, you'd rather trade here or here versus smack dab in the middle and get chopped up. You got Google recapturing the $700 range, but it needs to, in my opinion, it needs to pop up. It needs to give me some type of volume or something. I mean, you have that nice little Pearson pattern last week, but it's no follow through yet. So again, we'll see what the latter part of this week is. Price line is up 17 bucks. So it is coming into this previous level right here that I have posted from this low. Okay, broke down, coming back up, no volume as yet. And you can see on the daily, If this was just a regular stock, would you buy here or would you short here? Okay, you would probably wait until the break of this low, and you could see right there getting right up to a previous pivot. So kind of in no man's land where you're like, okay, it looks kind of really bullish or better on the weekly time frame, but the daily time frame is still showing some kind of sideways type of movement. So we'll see. We'll see what happens where they go into next week or the end of this week. But again, you're getting a lot of different movements so far. Even going into like well, you got a Facebook actually popped up pretty good on high volume. So this one looks pretty good. Let's look at the weekly time frame. Yeah, it's holding the lows. This is the grinding pattern that I'm talking about, but let's see which way they resolve this, because how they will resolve this grinding pattern will be one of two ways. They would go, this little educational stuff, they go here, layer on the previous high and go here, or vice versa. They come down, break down lower, and then break to a lower high and then continue down. So we'll continue to see what this one looks like, but Facebook had a big day today. And then we just got to continue to see what this choppy market does and go from there. So at 2093.5 or 3/4 right now, going back to the 60, you can see, let's see where they go. If they're going to continue or they're going to, what we're going to have overnight. It's been that type of market. So just letting you know, if you feel like you're not sure, it's best to keep cash because you don't want to start putting in small positions because you want to get active versus trading properly. Take care.